I am excited to be here again after 11 years and working with the church, and actually over that past 11 years have stayed connected with the church, worked with the finance team through the other bank loans and everything that's been going on, so I've got a pretty good grasp of the financial history. Let me start out by telling you a little bit about Share Financial Services. You know, when we partner with the church, we learn everything there is to know. We get CPAs to audit their financial statements. We get an appraiser to check their values. We get a lawyer to look at their documents. We worship with the church, get to know their leadership. I mean, it's an in-depth thing, but yet the church doesn't necessarily get to know that much about Share, and I think it's important you know who you're partnering with. Share Financial Services started in 1970. We're in our 50th year. It was created for the sole purpose of financing churches. In 1970, things were not a lot different than they are today. Banks were not real eager to loan money to churches. There wasn't a lot of denominational resources or other opportunities. And so the founder of the company put the company together to give churches an alternative method of finance. And it's a way for a church to self-finance. That's a working definition of a bond issue, by the way, to self-finance. And I'm going to give you a couple more as we get in later. But in the 50 years of working in the local church and everything that we have done, we have strayed from the local church maybe 6 or 8 times over the years for a couple of youth camps, a couple of Christian schools, a Bible college. We did Criswell Bible College in Dallas. And a freestanding ministry. Other than that, we spend 99% of our time in the local church, like we're doing here. Now, we see what we do as a ministry to ministries. When we partner with First Melissa, I won't be here trying to reach the community and help you. What we do is enable churches to do their ministry. So we're a ministry to ministries. You can imagine with an organization that spends 99% of its time in the church and views itself as a ministry, the types of employees we attract. All of our consultants are believers, love the Lord, active in local churches and all over the country and all kinds of churches. We have people in New Jersey, North Carolina, Virginia, Tennessee, Mississippi, Georgia, Florida, Texas, and California, I believe. But all working with the same mission, that is help the church move the kingdom forward. And that's our goal with what we're doing. Now, my role with the company is vice president. I've been with Share since 2002. I actually started working with the company a few years before that in a different ownership situation. So over 20 years, I've been working with Share and working with churches to do these kind of things. And it's been a real blessing. I have a couple of corporate roles with our loan committee and some training issues. But other than that, I spend my time doing this, which is my favorite part of what I do. Now, I won't bore you with a long story about me, but I do want to tell you the highlights. The best part of me is my wife, Shelley. We've been married 32 years this past May. We met in the Heights Baptist Church in Richardson, where we both grew up. We were both baptized there and grew up, went to college, came back and got married there. We have 2 daughters that both are fairly recent graduates of Oklahoma State. One of them is a teacher at Melissa High School. And if I'm not mistaken, teaches Trey's daughter and Melissa's daughter with junior honors English. And she also coaches volleyball and track. This is just her first year she completed, starting her second year. My other daughter is a counselor in an intermediate school in Mustang, Oklahoma. And I had the privilege of baptizing both of them at the Heights as well. We moved up to the Tom Bean area, Tom Bean Whitewright area, for those of you who know, about 30 minutes away, and left that church 13 years ago. But my dad was still serving as a deacon till he passed in 87, and my mom was teaching till she was 80 at that church. So that church's been a great part of our life, and it just kind of a lot about who we are. And so those are the highlights. I won't bore you with any more, but I do want to tell you, get started with what's going on here. The schedule is the information meetings. I did one in the last hour over in A105 for people who were in the first service, and we had a good response there. Now we're doing this one, and this one, as Trey said, is being recorded and will be shown online tomorrow night at 7 and Tuesday night at 7. And for those of you who are watching, there is a live chat feature. I'll be there to answer any questions that you have and get you all the information you need. So we're looking forward to that part as well. 2 weeks from now, we'll have what we call Reservation Sunday. And that will be a time as you come into worship, you will receive a little yellow card and you'll fill that out. And that's giving me the indication of interest. Like, I want to buy $10,000 at 5 years, whatever it is. You're going to fill that out. And then after the service, come out to the hub and give that to me. And Jan Pendleton, who is here with me, will be there scheduling appointments. Jan has been with Share for 20 plus years as well. She has a different role than I do. She's what we call a retail broker. And Jan's job is to help you with this transaction, to set up the paperwork and get any bonds invested and use your IRAs, whatever it is, to help you with this investment. And then on an ongoing basis, she'll help you with those same investments, but also if you ever have any interest in investing in another ministry that we're working with, she'll help you with that as well. Her job, my job, is to work with this church, and when I'm finished here, I go to the next church, and then I go to the next church. Jan stays with the individuals and takes care of you on an ongoing basis. So she can help with that. But we're going to set up those meetings for next week or the week after that, and that'll be Monday, Tuesday, Wednesday, Thursday, however many days that she needs to get everybody taken care of. So if you can't, and especially those of you online, if you can't be here on Reservation Sunday, we're going to cover this a little bit later, but if you're not going to be here, that's fine. I just need to know what you want to do. So give me a call. My phone number is going to be coming up at the end. I'll remind you and get the phone number, and the church has it as well if you missed that. But I just need to know what you're going to do, so I need you to call me and let me know. Same for any of you that are going to miss that Sunday. Now, the first question that we get almost every church we work with is, why use bonds to do this finance? Why wouldn't we just go to the bank like we did the last time? Well, I'm going to answer that question, but I'm going to use another question first to answer it. And that is, why is bond finance for long-term debt the method of choice for all of these institutions? If you look up there, corporate America, all the big corporations, and I just mentioned AT&T, IBM, you can name them all. Any of them that need long-term finance issue bonds. They're just called corporate bonds. Many of you may own some corporate bonds. Now, they have lines of credit to handle small cash things, but for long-term debt, they all use bonds. The U.S. government, we're all aware of the trillions and trillions and trillions of bonds that they issue to take care of the debt for the country. State governments do it, municipalities, the school districts. You know that beautiful high school that sits over here and the additions that they're making over there? You probably had an opportunity to vote on a bond issue, because a bond issue is what's paying for all of that. Schools do it all the time. Now, the reason that all these institutions do it, and the reason that the church is doing it here, is that bond finance is structured to benefit the borrower of the money, the church, the school, whoever it is, to benefit them. Traditional finance, bank finance, is structured to benefit the lender of the money. They don't take interest rate risk, different things that they have. So we want the benefits, and that's why we're doing it. Some of what I covered today will show some of those benefits. Now, a traditional finance would look like this. The bank would loan the church money, and the church would just have them pay a mortgage, and as long as they pay their mortgage, everything's fine. The question that comes to my mind is, where does the bank get the money to loan to the church? Because we've learned a lot about banks over the last 10 years, and one of the things we've learned is they don't have a whole lot of their own money. They have a lot of your money, other members of the church, people in the community, friends and family, all put their money on deposit at the church, or at the bank, and then the bank does pay them for that. In this case, I've got up there somewhere between 0.5% to 1.5%. Right now, that's probably about what you can do. It's been higher, and it'll go higher at other times, but that's the current. Well, then they loan the money out to commercial entities and individuals, and I've got a range there of 7 to 9%. Now you're probably thinking, that seems awful high. Well, that's high for right now. Bank rates are lower than that right now. But we can't predict a 20-year interest rate because it's variable rate finance through the bank. They're going to fix a rate for 3 years, 5 years, maybe 7 years. This last loan that the church had, the rate changed every month if rates changed. So they're variable rate loans. All we can do is look back over the last 25 years, and that's the range that it averaged, 7 to 9%. We just think there's a better way, and that's through church bonds, where the investors, the members, families, friends of the church can invest directly in the church and earn a little bit better interest rate. The shortest term bonds of 6 months and a year pay 2.2%, and you go out to the 20-year bonds and you pay 6%. The longer you invest, the higher your interest rate. I've got a sheet that we'll go over that shows those interest rates. But the investors earn that amount. The church then gets a 20-year fixed rate for about 4.6%. That's the lowest fixed rate for a church that our company has ever offered in 50 years. And that's going to put the church in a very, very strong financial position going forward. But the fixed rate is the real key there. Now, there is a third party involved. There's an independent trustee. Once I have sold all these bonds and collected all those bonds, shares contract with the church is complete, and the ongoing relationship is with the independent trustee. They will be the ones who receive the monies. They'll be the ones who pay out the principal and interest when it's due. The first time you'll come across them is when you write a check to invest. You won't write the check to Share Financial. You won't write it to First Melissa. You write it to the trustee. They take all of the investments, put it in an escrow account, and then they pay the bank loan out, pay it down and pay it off with those funds. And then the bank loan will go away and the bond issue's mortgage will be in place. Their most important role is the legal representative of the bondholders. We'll talk about that later in the presentation when we talk about risk of buying church bonds. Now, the benefits and advantages. This is the number one benefit to the church itself, by far, there's no comparison, is the lowest fixed rate. It can go up to 25 years. The church is in a position where they didn't have to go 25 years, so we're only going 20 years, which is a stronger position. But you get a fixed rate for 20 years. By far, number one benefit to the church. Second one, though, is more exciting to me. It is the interest goes to members and friends of the church. I have a strong belief that if a church is going to be in debt, they're going to pay interest on that debt, that it's much better stewardship to pay their own people that interest than to pay some outside institution. For example, I didn't do the math, but I know on a roughly $4 million 20-year bond issue, if they took the whole 20 years to pay it, the interest that they would pay would have to be somewhere near $3 million. Now, we can pay that $3 million to ourselves, or we can give it to an outside institution. To me, that's a no-brainer. Let's pay ourselves. The next one, however, as good as that one is more exciting to me. The church knows provides funds for ministry, otherwise not available, money you can't give. Now, we all give our tithes and offerings to the church. We give above and beyond that, sometimes for missions or ministry or for building funds or benevolence. There's all kinds of things we give to. But this is an opportunity to use money we can't give. Can't give our retirement accounts, our kids' education funds. There's other investments that we can't give. But we can invest them in the church, accomplish our financial goals with the interest that the church pays us back. In the meantime, we help the church do the kingdom work that they need to do. That's the win-win. Again, that's what excites me about what I do. It's an awesome situation for everybody involved. The last one, church knows the maximum cost of its long-term financing. And that's simply a function of the fixed rate. If you have a fixed rate, you have a fixed payment. And you can multiply that by the term, and you know what the cost of this is. With variable rate finance, you don't know the cost because the rate's going to change. And I believe this goes along with biblical principle. And I'm going to paraphrase, Trey. The scripture says, who would start out to build a building without counting the cost? Lest they're not able to complete it and they get laughed at. Well, we're not building a building this time, but we're still doing a mortgage for a building, and we'll be able to count the cost. So that's a great benefit. Now, you have this in your little brochure. And I've got it up there on the board. And just so y'all know, as busy as that looks with all the circles and lines, we had one little technical issue. This slide, normally I'd be pushing a button and one thing would be coming over. In this case, they're all there, so we'll just talk through them. If you've got a pen or a pencil, you might want to circle and do some of these same things, because this is what we call a schedule of maturities. It's what I call a bond program in a nutshell. If I only had one tool to explain how bonds work, this would be the one I would choose. Now, it's probably on the back of the third page in your brochure. The first thing up in the upper left you'll see is 40 periods. And then you'll see the first column is highlighted. 40 periods represents the fact that bonds come in increments of 6 months, and there are 20 years, so there's 40 investment periods. One person may want to invest for 4 years, one may want to invest for 13, one may want 20, one may want 10, 11, 12, 13, 14. Doesn't matter. There's 40 investment periods that are there for you to choose from. The next thing I'm going to say is there's 2 types of bonds, and you can see the long circle at the top that says compound interest bonds, and down at the bottom it says simple interest bonds. The difference is this. A simple interest bond is one that you buy for a specific period of time, and every quarter you receive the interest. You get a check in the mail from the trustee. Or if you have that bond in a retirement account, the retirement account is paid that amount of money. The main thing to remember about simple interest bonds is they generate cash. Every quarter, cash is generated. Now, the other bonds, the compound bonds, are exactly the opposite. You buy a compound bond for a specific period of time at a specific rate, and every 6 months, the interest is compounded and accrued within the bond. At maturity, or if the bond happened to get paid off early, you receive your original principal and your accrued interest in a lump sum payment. The people who invest in compound bonds are people who are investing for a future event. May it be retirement, may it be kids' education, may it just be their estate. Whatever it is, they don't need the money now, they want it to grow, so they buy compound interest bonds. All right, there are 4 denominations of bonds, and they're not Baptist, Methodist, Lutheran. Boy, we're in trouble. If you don't laugh at that, there's not a lot of bond humor. So that's about as good as it gets. Now, the 4 denominations are circled up there at the top: 1,000, 5,000, 10,000. And then that 4th circle is 146,500. And that represents a 1.5-year bond. The 4th denomination is any amount that's divisible by $250 and available in one period. At 146,500 is all of the bonds available at 1.5 years. I could sell one bond for 146,500, or I could split it up into 100 or $146,000 bonds and a 500. You can split it up any way, but once that 146.5 is gone, there's no more 1.5-year bonds. If you total that total principal available column, it'll come to $4,025,000, which is the amount of the bond issue. Now, if you would, over in that first column, you can see 2 numbers circled, and I can't see them. I believe it's 14.5 years and 19 years. And then if you'll go over to the $1,000 bond column and go down to 2,046.41 and circle that, what that represents is every $1,000 invested for 14.5 years will mature at 2,000 and change, or 2 times the original amount. And you follow down to the 3,174 or 3,074, circle that. That represents every $1,000 invested at 19 years matures for 3 times the original amount. So it's just showing you how the compound interest works over time. Now, we've seen how the bond investment works. The next question is, where do people get the money to invest? Well, many sources, and I'm just going to go over a few of them. Here you can see cash accounts, savings accounts, CDs. In 18 years of doing these bond issues, I don't think I've ever done one where somebody didn't take a CD and take that money and buy bonds. Savings accounts, those are common as well. People sometimes liquidate mutual funds and buy bonds. They go through stock market and other investments. This third one in the middle, tax-deferred accounts. I'm going to take a little time to talk about that because that's the largest source that we have. Every bond issue we do, it comes out just about the same. At the end of the year, when we total up all the sales, somewhere around 60% of all the bonds we sell, and sometimes that's 30 million, 40 million, and on occasion it's 50 million, but 60% of that money comes from people's retirement accounts. And so I want to spend some time here. The number one source of those funds is existing IRA accounts. Traditional, Roth, simple, SEPs, things that you have at your bank or at Merrill Lynch or wherever you have it, but an existing account. What we do with those is set up a like account at the trustee. If you've got a traditional, we'll set up a traditional. And then we do what's called a trustee to trustee transfer to buy the bonds. Now, when you do that, there's no tax consequence, there's no penalty. And you can do as many trustee to trustee transfers as you want. There's no limit to that. And so that's the most common source. The great thing about that is you can do a partial or a complete transfer. I'll use an example. Say I had a $100,000 IRA at Merrill Lynch and I want to buy some church bonds, but I only want to buy 50,000. I don't want to use the whole 100. We'll just transfer the 50 and leave the other 50 at Merrill Lynch. Or we could look at another situation and I look at it and I say, well, I have this IRA. I also have my 401k at work. My wife has an IRA and a 401k at work. I think I'm going to go ahead and take all of that 100,000 and transfer it. Whatever you want to do, it's up to you. So just keep in mind that we can do IRA transfers with no tax consequence and no penalties. That's the best source. The next best source is 401ks and 403bs, work-related plans. Now, 99.9% of the time, if it's a plan that you still are employed and participate in, they're probably not going to let you take that money. It's just, it's captive. However, if you are retired or if you're 59 and a half and still working in the company, you can take a distribution, we can do a rollover and not have any tax consequence or penalty. But most of them are ones that are left over from prior employment. You know, somebody's left a job, and I know in the metropolitan area here, I've lived here most of my life. Over the last 10 years especially, there's been a lot of job turnover. There's a lot of these accounts out there. And we just do a direct rollover to an IRA, no tax consequence, no penalty. Great source. I have helped some couples consolidate 4 and 5 and 1, even 8 different work-related plans. So keep that in mind as a great source. Now, funds you control or manage for others. Before my dad passed and my mom went into the memory care, I bought simple interest bonds for them to supplement their income in retirement. Helped them by getting them a better interest rate and helped the church every time I did that. Lump sum distributions and trusts, you can see these. The most important one on this page is personal sphere of influence. And let me explain why that's so important. Your friends, neighbors, co-workers, anybody, family, anybody that you could bring to invest saves the church money. And here's why. The church is paying my company a flat fee to do this bond issue. And it's based on the amount of the bond issue. If we place all of the bonds locally through the sphere of influence of the church, there's no additional cost. They don't pay us anything. However, if there's bonds left over, then we take those and go to the market. We sell those to our clients. And the thing you have to remember is when brokers like Jan, when they work, you want to get paid, don't you? Absolutely. So when the brokers work, we have to pay them. So anything we sell outside costs the church 5%. So if your son or your father or your friend invests, it saves the church money. That's why it's important. Now, a couple of things you can do. Tell them to watch the web presentation tomorrow night or the next night and get all this information you're getting. Or we have plenty of these green brochures and you can take them and pass them out to a few friends or family members and just ask them to call me. I'll be happy to answer any of their questions. You don't need to try and explain it to them. Now, I mentioned IRAs, so I want to mention fees. Keep in mind that there's never a fee or a commission involved when you invest in a church bond. You don't ever pay a commission or fee. Another reason it helps the yield compared to some other investments. But the church that you're investing in is paying those commissions. So you don't ever worry about it. But there is a fee that you pay if we open up an IRA account at the trustee for you. You pay $50 a year for that account, and whenever you terminate it, it's $50 as well. But that's very competitive rates, and I just want to be sure that you understand, no fees for bonds, but IRAs do have a fee. Now, you have this in your brochure. This is a sample of investment ladders that I put together. And basically, I just put these together to show some creative ways for you to invest in church bonds. You don't just have to pick out, I want a 10-year bond and buy a 10-year bond. You can if you want, but if you're trying to accomplish something specific, we can do what's called a ladder. This first one I did is a $50,000 educational ladder. You got a child or a grandchild about 9 years old, hopefully going to go to college in about 9 years. You've got this money to invest for that now. And you'll see what I did was I invested $10,000 a year for 5 straight years. Now, if you'll remember, I told you I just had 2 daughters recently graduate college. I learned probably everything you need to know about paying for college in those experiences. The first thing I learned was after you pay for the freshman year, you still have to pay for the sophomore year and the junior year and on as you go. And in many cases, the 5th year. The kids that are in college call that 5th year a victory lap. Now, that's not much victory for the parents. I was lucky. Both of mine only took a half a victory lap. Took them 4.5 years. But that's why I have 5 years on this, is because it can take that long. And you can get money each year to pay for tuition, room and board, whatever it is you need. That $50,000 matures over that 5-year period for $83,000 and change. Now, the one below it is structured for a totally different thing to accomplish. This is to get an equal payment every year out of compound bonds. And so we set this up and bought bonds over a 6-year period with different amounts of money, but similar payoffs. You can see all of those pay about $15,000 a year. This is where somebody says, we're planning for retirement. We're estimating our Social Security to be this, our pension, our 401k. If we had about $15,000 a year more, that would be perfect. And so we invest that $50,000 and get that payout of $15,000 a year. On the back of that page, there's 2 retirement samples. One of them is I'm going to retire. I'm maybe 50 years old. I'm going to retire in 15, 16 years. I've got $100,000 in my IRA, and I'm going to transfer that to an IRA and buy bonds, and I'll get an income each year. You can see the annual income and the total maturity value of a little over $280,000 on this sample. Now, the last one is just a large one from 8 to 20 years, retirement, $25,000 a year investment. You can see the payout and the income that it brings them over that time. Keep in mind something important. These are just samples. You don't have to do $25,000 ladders. If you want to do a $1,000 ladder, you can do whatever it suits your needs. These are just sample numbers. We'll use whatever you need to use. Now, you have this in your folder. You can follow it along there, or you can look at it on the board. This is what we call an investment profile. And I told you we've been in business for 50 years. We've gathered a lot of data about all the work we've done in 1,200 programs over that time frame. And what we did was analyze the churches that sold, where we were able to sell all of the bonds to the sphere of influence of the church and do it quickly. And the reason we did that is that's the goal in every church. We want to sell them all and we want to do it quick because that's the most cost-effective thing for the church. So what we learned is there's 3 levels of investment that it's going to take for us to get there. The top level is going to do the most by far, and it's going to be the smallest group of families. In this case, the example says 8 families, so it's going to be 5 to 10. Going to invest somewhere around $1.7 million or 42% of the total. It's like the 80-20 rule in everything in life. A few people are going to do the most, And we usually find somebody does somewhere around 15% or 600,000. Someone does around 10%, 400,000. Someone does around 5%. And then that 100,000 is just a common number. So that eight investments gets that 42%. Now, keep in mind, I know this is not a scientific thing, and I have no expectation that I'm going to have one 600, one 400, one 200, five 100s. It's going to come like this chart. But what I know is, if we get it all done, we're going to have 8 to 10 families who are going to invest somewhere in that neighborhood, that top level. Now, that second group is a much higher number of people. It runs from 15,000 up to 75, and there's 50 to 60 families in that category. They're going to take another 47% or so, and if you're looking at 42 and 47 and see 90, it's just a rounding thing in the computer. But the first two categories are going to do about 90% of the total. Then the last category is the biggest of them all, maybe 75, 80 families, somewhere around there, that are going to do 10,000 to 1,000 and finish up that 10%. Let me tell you, this is a time where I want to make a promise to you. I want to promise you that no one from Share, no one from the church is going to ask anybody to participate at any given level on this chart. That's not what we're about. But I am going to make a request of you. I'm going to request that you prayerfully consider investing. And as you do that, I want you to consider it in the light of investing something that is both meaningful and significant to you. Now, meaningful and significant to you can only be determined by you, but what I know in all these years is some families, $1,000 is just as meaningful and significant as $600 to another family. And so I know if we pray about it that way, whatever response we get, we're successful. And that's all we're looking for. Okay. Now, this is the card you're going to receive in 2 weeks on Reservation Sunday. It's yellow, and you're going to fill it out. And I'm going to go over with you now how to fill it out. I'm going to go over with you 2 weeks from now on how to fill it out. But you're going to fill it out, come out to the hub, give it to me. I'm going to look at it, give it to Jan, and you're going to set an appointment to work with Jan on getting your account open. So we obviously need your name, phone numbers, address, all that good stuff. Cell phone's the most important number these days. Keep in mind when you get a call, if you get a call on that, Jan, what's your area code? 972. Okay, so it's fairly local. Mine's 214. In a lot of churches I work in, my 214 doesn't match with their 405, and so they don't answer the phone. I'm guilty of the same thing. If I don't recognize the number, I don't answer. But it'll be a 972 or 214, so that shouldn't be a problem. But anyway, we'll set up an appointment for Monday, Tuesday, Wednesday, Thursday, however many days we need to be here for her to get that done. We'll get your accounts open and go from there. So to fill out the card, in this example, it says I want $15,500 of those 2.2% bonds, so you write it on that line. And the other one says I want $30,000 worth of 4.5% bonds, so I write it on that line. Those red arrows are for me. I remember Larry said there's only a certain amount of bonds in each maturity period, so when he comes to mine, Larry, if you come to me and those are all gone, I'm willing to go as short as an arrow up. I'm willing to go as long as an arrow down. In other words, Larry, here's a window you can fit me in. Everybody's window's different, but just give me what you can do. And with that, I'll have the flexibility to get everything taken care of, I'm certain. They also, on this sample, wanted $10,000 worth of those simple interest bonds and the total investment of $55,500. Now, on the bottom right of the card is where you're going to tell me how you want it registered, in what names. And the first one's joint ownership. So if a husband and wife are going to buy the bonds together, we'd be joint. Like most of you have, if you're married, most of you have a checking account. It's probably a joint account or a savings account, that kind of thing. Joint tenant. Then some people will buy them individually, just in their name. Maybe a single person, or maybe a married person who just has their own assets and wants to buy bonds. Corporate ownership, if you own your own company and want to use retained earnings, we can do that. We just need a couple of corporate documents when you come in, and we can get that taken care of. Gifts to minors. This is important because I've never done a bond issue where somebody didn't give a gift to a minor. It always happens. Sometimes there's a bunch of them. And it could be a grandchild, it could be a child, it could be a niece, a nephew, anybody that you want to give money to as a child. The key is they don't have to be here. They don't have to sign anything. They don't even have to live here. But we need their social security number and birth date when you come in to open the account, and that'll take care of it. After that, we have IRAs. If you're going to use a retirement account of any kind, I'm going to ask you to do me a favor. In the brochure, you don't need to get it out, but there's a form that says instructions for investing with retirement funds. On the back of the form is a questionnaire. If you will call your current custodian, whoever's running your 401k, whoever's holding your IRA, and ask that list of questions and fill out that form, it'll be a great help when you come in. Give that to Jan. She'll know how to handle your rollover or transfer or whatever it is we're doing. That'll help us a lot. The next one, a trust. If you're going to use a trust, bring the trust documents in. We'll make copies of the 2 pages that we need. Basically the page that names and dates it and the page that names the signatories. And then we can put it in your trust. Future interest. You would check that box if you're thinking, you know what, after learning about church bonds, when mine mature, I might want to invest in another church. Or next year when I get my tax return, I might want to invest it in another church. Anyway, sometime in the future, you might want to invest. Check that box. Jan will put you in her file, and she'll just let you know when things come available, and she'll be the one to handle it if you decided you wanted to invest. So just let us know if you might be interested there. Questions most often asked. First one, is the interest earned on these bonds taxable? Please hear me. Absolutely yes, unless they're in a retirement account. And then the tax is deferred like any retirement account investment. But any other way you register it, you get a 1099 every year. On a compound interest bond, you get a 1099 for the interest that you earned but did not receive. It was accrued, but you still pay it that year. On a simple interest bond, obviously you receive the cash and you pay the tax that way. What if I have an emergency and need my money? I need to sell some bonds. Well, let me be very plain. There is no established secondary market for church bonds. You can't call your broker at Merrill Lynch and say, hey, sell my Melissa bonds. But here's what you can do. There's 3 options. The first one I say is if you've got a friend or family member who's willing to buy the bond, that's the fastest and easiest. So for example, I need to sell some bonds. I've got a family emergency. I call my brother. I say, hey, Ross, you know what's going on with the family. I need you to buy some of these bonds. Can you do it? He says, sure. So I get the trustee to tell me the value, and he writes me a check, and we tell the trustee to change it from Larry to Ross. He owns the bond. I've got the money. Problem is, not everybody has a friend or family member who's willing to do that. So we need other options. Second option is to come to the church office and let them know, hey, I got some 20-year bonds for sale, and the amount. And they'll let it be known to the congregation, and somebody in the church, maybe will hook up and buy those bonds from you. Third option, and in last resort, and the reason I say it's last resort, you'll see, is you can call Share, and we will do, on a best efforts basis, sell your bonds. Now, a couple of things about that. The church has to be in good standing. The first thing we're going to do, you call and say, I want to sell my first Melissa bonds. We're going to say, great, and we're going to check with the trustee to make sure you're in good standing. But if the church is in good standing, we'll say, yes, we'll be happy to sell those. But I told you before, when brokers work, brokers get paid. So when they sell those bonds, it's going to cost you 5% to do that. Now, we have, to my knowledge, never failed to sell the bonds for a church that was in good standing. Jan, are you aware of any that we haven't? I think we've sold every one. In fact, the brokers love to get those bonds because they're seasoned and they usually have a better interest rate because they're 2 or 3 years old and they're shorter term now. But you remember, you got to pay to do that. Now, after you give it to us, I'm going to say 2 weeks is a reasonable time, turnaround for the money. Something like that, Jan? 3 weeks, 2 to 3 weeks, somewhere around there. Now, are the bonds callable? Can the church pay them off early? Now, we just sold our bonds early, but can the church pay them off early? And the answer is absolutely yes. One of the benefits to doing a bond issue. Remember way back when I first started, I said we wanted to set this up where we get the benefits, the church. This is one of them. No prepayment penalty. They can get out of debt as fast as they are capable of doing. Now, there's ways to look at that. Somebody buys a 20-year bond for their retirement account and says, man, they called my 20-year bond. I was all excited about having that in my retirement account. Well, let me tell you some positive ways to look at it. First, you got paid the 20-year interest rate and you only tied your money up for 3 years. Somebody who bought a 3-year bond got paid the same day you did, and they got about less than half the interest that you did. So that's a positive. Number two, if you want to reinvest it, then Jan will be happy to put you in another church that we're working with, and she does that. And again, remember, the church that you invest in is paying the commissions. You don't have to. So it takes care of it. Third, and probably the best of this whole process, is if the church is paying off their bonds early, it means they're doing well financially, means they're getting out of debt faster, means there's more money for ministry, which is what we're here to do anyway. And so I look at it as a positive if the church is able to call those bonds. The main thing I want you to understand is they have the right to do so if they need to. What if I can't be here on reservation day? We talked a little bit about this at the beginning. I'm going to be on vacation, or I'm watching online and not attending in person yet. I'll start that later. If you're not going to be here, no problem. I just need to know what you want to do. So please call me. We'll talk about what you want to do, and I'll get you set up, and we'll get you an appointment. We'll take care of everything if you're not going to be here. If by some chance you're going to be out of town the whole time we're doing paperwork, we'll handle it through the mail. Just don't worry. All you need to know is if you're not going to be here and turn in a card, you need to call me, and I'm going to give you my number again in here a minute. What happens if I die before my bonds mature? A lot of people ask about this. They say, do my kids get the money? You know, what happens? Well, it depends on how you registered the bond in the first place. If it's joint ownership, then if the husband dies, the wife just automatically owns it. It's a joint deal. There's nothing that has to be done. Or if the husband dies or the wife dies, the husband owns it. It's joint. Every time I use that, somebody will ask the question, what if we're both killed in a car crash? I get that question every time, and I say, well, the odds of that happening are tremendously low. It doesn't happen a lot, but if, then your estate will take care of it. I ask them, do you have a will? Do you have a trust? Whatever you have, that will dictate who gets it. But that's what happens if you both go. If it's individual, just I bought it in my own name, then you have the right to name one TOD or transfer on death beneficiary. So I pass away, I've named my brother as the TOD, he gets the bond. Now, some people say, I've got 4 kids, I need to have 4, have them in beneficiary. Well, we'll split up your amount of your investing into 4 bonds, and you can name a beneficiary for each one. We can take care of what you're trying to accomplish in almost every case. If you die and your retirement account has the bonds, your retirement account already has designated beneficiaries, so you don't have to worry about that. What are the risks of buying church bonds? Most important question on the board, and I want to be sure that you understand this. Every investment has some degree of risk. Church bonds are no exception. The church bonds have 2 risks. Okay, I'm going to explain them. The first one is, remember I said this was a loan. If the church were to default on their loan, not pay it, can't work it out, the trustee's going to work with them, they're going to do everything they can, but if it can't be worked out, the church just says, we're done. Well, the trustee is going to foreclose on the property, sell it, and pay you, the bondholders, the money as far as that money will go. Second risk. They sell the church, and the church doesn't sell for enough money to cover everybody's investment. So you lose a little bit of money, or some money. I don't know what it would be. In this particular case, and I wish Tim had not walked out, he would know the exact number. Trey maybe know it. Do you remember what our exact number was for the appraisal?
7.2 million.
Okay, I was thinking somewhere around $7 million. So we had this appraised. The whole property is valued at $7.2 million. The total indebtedness is $4,025,000. So in a fire sale, if we can sell this $7.2 million complex for $4,025,000, everybody gets their money and we're fine. All right, in our history, I believe we have had, it's either 8 or 10 churches where the church had to lose their building. Only 2 of those were foreclosures, where the trustee actually took the building. Some of them were where the church gave a deed in lieu of foreclosure and the trustee sold it. And some of them were the church sold them themselves, sold the building. I don't know if any of you remember, this has probably been 15 years ago. A Baptist church in Garland had a terrible bus accident with a bunch of youth going to camp or something, and a bunch of kids were killed. I think it turned out the driver was drunk. I mean, it was a terrible situation. We had just completed a bond issue in that church 6 months prior, and that church just spiraled down, and they ended up selling the building themselves. We didn't foreclose, they never got behind, but they just couldn't manage it, they sold it. So things have happened like that. Keep in mind, First Melissa is the only church performance that matters to you when you invest in this church. Okay? It doesn't matter what happens to any other church. It only matters, does First Melissa pay their bills for your investment here? Now, out of those 8 to 10 where the church was lost, I think there were 2 churches where the investors lost a little bit of their money. They did not get 100% of principal and interest due. One of them, Jan told me, they lost $2.99 per $1,000 they invested. So I would call that even, but officially that's a loss. Another one lost some money, but they were still in the 90-something% range of their deal. Now, I'm thrilled to tell you that track record. It's the best track record in the industry. We're just thrilled about it. But every time I tell it, I've got to qualify it and say, past performance does not guarantee the future. You could be the first church where a ton of money was lost. I'm not saying that's what's going to happen, but that's what I have to be sure you understand when I talk about risks, okay? Now, these risk factors are printed on your green brochure, so I'm not going to read them for you. I know you can read. When you get the prospectus, hopefully 2 weeks from Sunday, you'll get the prospectus as you turn in the card. It will have pages of risk factors for you to look at and ask questions about if you want to. You'll have time to read the prospectus before you do any kind of opening of an account. And there is my phone number again. For those of you watching online, please write this down. Larry Van Horn, 214-704-9239. Anytime over the next 2 weeks, if you have any questions, please give me a call. I also, after we're done, I've got some business cards if one of you wants to come get my card. If you have questions about your IRA accounts or anything like that, Jan has some cards. She'd be happy to give you that. But anything about the bond issue, give me a call. And again, those of you watching online, if you're not going to be here on Reservation Sunday, please call me at that number over the next 2 weeks and I'll answer any questions, and you can tell me what you want to do as far as your investment, and we'll be able to handle it just as if you were here. Now, that is the end of the formal presentation. I have 2 other things I want to share with you, and then I'll take the questions that you have. The first one is, this is an incredibly unique opportunity for you as an investor. And the reason I say that is in the United States, we have more investment opportunities than anybody else in the world. And I can list them, I can sit here and list them all day, but we've got stock markets, foreign stock markets, bond markets, we've got collectibles, we've got livestock, we've got real estate. Excuse me, I can go on and on. And there are good investments out there. But this investment is unique in that it's an opportunity to invest in an organization that believes what you believe. It's an opportunity to invest in an organization that has the same kingdom agenda that you have. And lastly, it's an opportunity to invest in an organization that will not only allow you, but encourage you to help run that organization. Trey, when we are not in these odd circumstances, we have normal Sunday attendance. How many volunteers are there on campus on a Sunday morning? 250? So they need you. They don't only encourage you, they need you to help run the organization. Now, I think it's hard to find an investment that has those 3 characteristics, and I think that makes it very worthy of your consideration. The last thing I want to share with you, and then I'll answer your questions. After getting this information and talking about it with your wife, financial advisor, whoever it may be, if you think that you're going to be somebody who would make a very large investment, and I'm going to say $50,000 or more, 50,000, 100, 200, you're going to be the 600,000 guy on the top of the chart. I'll tell you a funny story. I do that chart everywhere I go. At about 3 months before we did this church in 2009, we did a Bible church in Frisco for the exact same amount. The church was the same size. It was almost like mirror churches. And after I did this meeting, one of the elders came up to me and got me apart, and he said, I want to be that number one deal. And I said, you got it. We'll talk about it and we'll do it. I think he's still your client, Jan. But anything that you're going to do above $50,000, I want you to please call me before, I'd like to know before Wednesday of next week. If you can call me this week, that's great. But I need you to call me for two reasons. When you invest that amount of money, it's not just a single bond, it needs a structure. And so I want to talk about what are you trying to accomplish, and we can structure the investment. Also, an investment of that size, I want to be sure through your other holdings that it makes sense. You know, that it's an investment that fits your portfolio. And I need to ask you some questions in order to get there. The reason I need to do it in advance is when that Sunday comes and we're turning in cards for appointments, I don't have time to go through all that. And by that time, we're getting the bonds, we're getting them ordered, and we just don't have time. So call me in advance, we have time to talk it through. And I want to be sure, like I say, that it's suitable for you and that it's structured in a way that best benefits you. So give me a call and we'll talk through that. That is everything that I have to tell you. I want to now answer any questions that you've got.